SharePrices.com.au studios, I'm CJ Dore. So we're looking at indicators, technical indicators, a way of getting a read on the market and price action and where things could be going. Now we're going to do that this time through the RSI. So what does it stand for? The Resistance Strength Indicator. So let's get underway and actually find a chart here. Here we go, a candlestick chart over a number of months. Let's look at the price action firstly. And what we've got here is coming in up on a high, falling right down. We've got a gap there in the middle. That's called gapping or gapping down on this occasion, where it's not connected to the previous day's trade, like you can see right along here. And it goes down to the lowest point on the chart and then evens out somewhat after a big rise. Now what we want to do is apply our RSI. So we go up to the top, the middle tab, technical indicators. We'll click on there. We want the RSI. There it is. We'll choose that. Then it brings up our period and it will default to 14 or 14 days. So we're happy with that, and we'll say bottom left-hand corner, we'll create. So there we go. There's our RSI. That is our technical indicator and what we'll be watching to try and get a hint of where the market is headed. So what we're going to do now is compare our price action with our technical indicator. Now there's a couple of things to note here. Down on the right hand side, it is rated essentially from 0 being the lowest to 100 being the highest. And our indicator will vary around in between those zones. Now what you'll note also is there's the number 80 and also the number 20 in there. And it largely moves in between that zone. So 80 and 20, so what? What does it mean? Well, from a technical analysis point of view, a lot of traders and investors will see when does it breach on the downside the 20 and when, if, does it breach the upside with the 80. Now what it will hint firstly with the downside is if it goes under 20, some might see that this stock is oversold and it might be a good time to get in because it's exhausted on that downside. Maybe it's gone as low as it's going to go, and from there things could start to rise. Now, alternately, what if it breaches the 80? Well, maybe there's a little hint for some investors and traders that it's breached the 80, meaning it is now overbought and it's gone as high as it can go on the upside. Maybe it's a good time to sell or start selling this stock because maybe it's got nowhere else to go. So let's understand it in real terms, comparing our price action, our chart, and our technical indicator. So let's go right down to that big low, that big drop, the big red candlestick, and we'll mark that up against our technical indicator. Now what we'll note is that is the lowest point on this whole chart over a few months. Now at that point it actually did breach that 20. So if you were reading it via that 80-20, some say 70-30, but we'll look at an 80-20. If it breached there, maybe it's a hint that it's oversold. Now look at this. It gapped down off a high, and on that red day or the negative day, it breached the 20. Now maybe if you were to read that as an opportunity to get in and buy because it's got nowhere else to go, and maybe it'll start rising, look what happens from that point onwards. Absolutely spot on textbook way of reading that there. Went down, breached the 20. It's a hint and it's an indicator, a technical indicator, that it's now oversold. And look what's happened. Off a big high, big sell-off, a few days later, big red candlestick. Where else can it go, given the amount of information that we know about this stock on our selected 14-day period? So as far as a technical analysis point of view goes, that is an absolute perfect read. If you got in at that point, look what's happened here, back up into a neutral territory. Nowhere within the RSI does it go up and breach the 80. And look what's happened. Pretty soft, pretty smooth, pretty even, a mixture of green and red, but as you can see the arrow indicating it has rebuilt. But at no point has it spiked, the opposite of what it did down here with our gap down. So technically spot on, it shows the results here, and that's why you use the RSI to get an indication of where is the market going based on these breaches of the 80 at the top end and the 20 at the bottom end. It's never a guarantee, but a pretty good rule of thumb, and what you can see here technically, absolutely spot on, a great technical read. If you bought, look what's happened as a result. So that's what the RSI is all about and what the series is about with our technical indicators. So apply an RSI to something you hold or you're keen on watching, go back in time, have a play with that period, change it up, change it down. But happy trading, good luck with the RSI. It's a really good indicator, it's widely used, and hopefully you can understand it and read it better to help you with your anticipation of share price movement. I'm CJ Dore from the SharePrices.com.au studios.